Welcome to the Market Matters Weekly Wrap. The books have closed on February, so we're going to talk about portfolios and portfolio performance for the month. Just a quick run through first from you about just the general theme of the portfolios, how we did in February.
Yeah, it's the key to what we're doing. So we should really be focused on a monthly basis, and we will be in this weekly video. The first video each month will focus around portfolio performance. We've now got 5 portfolios on the Market Matters website, so there's a lot to keep across there, Harry. So I think it's really important that we outline and discuss, how we're progressing, whether we're meeting, tracking, exceeding, or falling under the targets we set for each portfolio. So, just on a bigger picture context, portfolios had a really good February. So the market was up a bit over 1% in February for the ASX 200 accumulation index. Obviously, reporting season dominated that period. Reporting season overall was pretty strong. So we had 3 beats for every miss on the company reporting season. EPS upgrade to 5%, dividends were increased by 10% coming out of reporting. So that was the backdrop that portfolios were operating into. But yeah, looking at our flagship growth portfolio, added nearly 2.5% for the month. We had a really strong performance in the global macro ETF portfolio. It was up more than 6%. So that sort of speaks to our macro positioning playing out. The international equities portfolio did a few percent, which was positive. The emerging companies portfolio, which was launched, had a really strong month as well. And the income portfolio added a bit over 1%, which is pretty much what we want it to be doing each and every month. So a good month overall, Harry.
Good month overall. All right, you touched on the ETF portfolio. That was the best performer. Just maybe some underlying things as to why that one did so well.
So yeah, just to give subscribers a bit of an understanding of that portfolio, it's designed to outline our 10 best macro picks, the most high conviction macro calls that we've got in the market at the moment, and then provide a portfolio, a way of actioning those through ETFs. We try and have ETFs listed in Australia, but a lot of the times they will be listed overseas. Investing internationally is a lot more accessible these days. A lot more brokers are doing it. So that portfolio is sort of a simpler portfolio and probably less changes. But if you want to go and see our 10 top macro calls and go and have a look at that portfolio, a couple of things that did really well this month were obviously our call on copper. We've been long copper for quite a while. That position's up more than 100%. So that's done really well over the course of February. Our call around bond yields, so bond yields increasing. We've got a position, the TBF, it's in the ETF portfolio is called, which is basically is exposed to rising longer dated bond yields, so benefits when longer dated bond yields rise. So yeah, a good month for that portfolio, Harry.
Certainly was. It's called the flagship portfolio for the reason the growth portfolio has been around the longest of the lot. Just some high conviction calls in that one for us, James.
Yeah, we have amended it to be the name of the portfolio to be flagship growth portfolio, just to separate it from the others. So when we know what we're talking about, it's a portfolio. We send text messages out when we amend those positions in that portfolio. So as I said, it had a pretty good month. The portfolio skewed towards the resources trade, the reflation trade, BHP trading at all-time highs. I spoke about BHP in the note today, and where it's traded up above $50. We sort of flagged $60 as a potential level to trim that position. But again, it's not every position has been going well in that portfolio, but the majority have been. So our tilt towards resources, our tilt towards banks, and we don't have a huge exposure in the IT growth space, and that's really struggled in February. So we've got a few positions in there: Megaport, Zip, Xero, just to name a few. But the main bulk of that portfolio is in the value-orientated end of town. The reflation trade is very much well represented there, Harry.
Certainly is. All right, the two I's, they're two very different portfolios, the income and the international. Got to throw those in as a combined question here for you, James. How'd they go in the month of Feb, and where are we looking there?
Yeah, they did well. The international equities did better than the domestically focused income portfolio, but that's understandable given the market was higher over the period. Starting with the international equities portfolio, we're very much skewed. I just touched on growth in the flagship growth portfolio and that high value sort of IT trade. We're very much exposed to that in the international equities portfolio, so I'm conscious of that at the moment. We nearly got we've nearly got 50% of the portfolio exposed there. That's served us really well over the last couple of years since launching this portfolio, but I'm conscious of that. I wrote this morning about Apple, I wrote about Microsoft, and our expectation that we'll be trimming those positions. So keep an eye out for alerts, probably not in the next week or two, but if those positions show further strength, we'll probably lighten the load there. Not a lot happening in the income portfolio over the course of the week or the month, Harry. So again, I spoke this morning about our exposure in the retail space, that we may look to trim those into further strength. But again, it's pretty steady as she goes. That's a fairly, if you want a more of a passive approach to income investing that has lower volatility than the market, incorporates hybrids, other fixed income type securities, that delivers, consistent attractive yield targeting 7% per annum, that's your portfolio. So easy as she goes for that one, Harry.
All right, if that's your portfolio for more passive style, what's the emerging companies portfolio about, James?
Yeah, a new one when we launched the Market Matters website, a new one that we're publishing. It has been going for 12 months. You've been running it for 12 months, Harry. So this is all about searching out those interesting growth companies that are outside the ASX 100. So seeing as you're managing it, what's, give us a flavour for a couple of the stocks that are in the portfolio that you're excited about now.
Well, we had a couple of good updates today. We had Wiser and Strandline out. Wiser up there. Credit facility, and Strandline signed another offtake agreement. Two that I'm probably most keen on at the moment is Ripe. They didn't have a great report. It wasn't awful. But looking ahead, they're moving into Japan, and I think that momentum will start to pick up. And they're widening their partnerships away from Microsoft. So maybe a little margin compression for them short term, but sort of over the longer term, I think it'll be better for them. Coronado, they didn't have a bad result. They were down 10% on the day. Sounds badly, but their outlook isn't too bad. Maybe a little bit higher costs on their coal front, but the outlook for coal for mine is pretty spectacular. So they're our two key picks for now. We spoke about Wiser this morning and Lynas as well, so have a look at that report if you want more.
Yeah, it's interesting, and I think it's really important to highlight just around the added volatility you're likely to get in a portfolio like that. You mentioned a couple of stocks that have done really well today. Wiser was up sort of 7% when we left the desk. Strandline was up nearly 30% early on. I think it's up around 10 now. So you're going to get a lot more volatility in that portfolio, and Harry's going to have his finger on the pulse when we're outlining that. Anyway, I hope you've had a great week so far. As I said, these weekly updates will come to you each and every week on the new Market Matters website. We hope you're enjoying the experience, and we're back to speak with you soon.